The war in Ukraine, the failure of green energy, disastrous government policy, dependence on Russian oil and gas, and the results of the global pandemic, all conspired to cause the energy apocalypse. In this video, we will examine the current and future state of the evolving disaster and its impending effects on the world economy and the capital markets. Buckle up, Buttercup. This might just blow your mind. Okay, so on this channel, we deal a lot with the energy situation, and the reason we do that is because energy affects the economy and therefore affects the capital markets. The energy business is a global business, and if all you do is focus on the United States and our energy situation, you basically miss the big picture because energy is an international business. Recently, U.S. natural gas jumped to $10 for the first time since 2008. This is absolutely unprecedented, and you have to go back to basically the financial crisis to see anything that even comes close to this. U.S. natural gas futures jumped briefly above $10 per million BTU on Tuesday morning, and natural gas prices have soared in recent weeks as Europe scours the world for non-Russian gas. This is an unbelievable situation, and it's the result of Russia's invasion of Ukraine and the insane dependence on Russian oil and gas that Europe has incurred. In fact, Europe's gas prices are now equivalent to $410 per barrel if you were to compare it to oil. This is completely unprecedented, and it will have a very deleterious effect on the European economy going forward. Here you see where WTI crude is. That's basically the U.S. Oil. You can see it's gone up to 95.25, up significantly from some of these downdrafts that it had. But this is basically an upward trend that's started recently. We're going to talk a little bit more about that in a minute. Here's where nat gas is trading. You can see the incredible rally that it's had since July, and now it's up, around 10. It traded down a little bit. It's around 9.5 right now as I made this video. And if that wasn't bad enough, recently the Saudis announced that they are going to be reducing production right after Joe Biden met with them and begged them to pump more. The Saudis and their allies opened the door to oil output cut to keep prices high. Here they are talking about reducing a significant amount of production to the world economy. High oil prices have been beneficial for OPEC Plus, an alliance of oil-producing countries that control more than half the world's oil output. This is particularly painful because our boy, Joe Biden, went to beg the Saudis just a few weeks ago to pump more oil to try to relieve oil and gas prices and also boost his popularity before the midterm elections. Well, it looks like that failed. The old fist pump there kind of failed there, Joey boy. So it really makes you look not only stupid, it makes you look completely ridiculous. So what does this mean? This is an ongoing disaster that is unfolding, and there are many root causes to it, and we'll discuss a couple right now. First of all, Europe rushed into its expansion of green energy in a very reckless manner. They shut down their coal facilities, they shut down nuclear facilities, and they went headlong into green energy. Simultaneously with rushing into green energy, they went headlong into becoming more dependent on Russian oil and gas. The timing of this was particularly perilous because then when the war came in and the sanctions came in, they were forced, due to what the United States was doing and what the rest of NATO was doing, they were forced to put in sanctions, which they recently implemented, and the goal is to basically wean themselves off of all Russian oil and gas. Now, in doing this, it puts enormous pressure on world energy prices, right? Germany, for example, has to cut deals with the United States and other countries to get liquefied natural gas to replace the gas that comes from the Nord Stream pipeline. And in doing this, it is just putting enormous pressure on all of these prices. Simultaneously, you have Japan, India, China, they're all competing for this gas at the same time, driving prices up. Now, the result of this is countries like France and Germany are starting to ration gas because they simply do not have enough gas to heat their homes, and they don't have the reserves that they will need when the winter comes and the demand for gas skyrockets. You have the same situation with oil, because as the world puts sanctions on Russian oil, that oil has to be replaced. And Russia supplies over 10% of the entire world oil supply, and this comes out to millions and millions and millions of barrels per day. So what's the result of all this? Okay, you have a situation where inflation worldwide is very high, anywhere from 8.5% at the last print in the United States up to 14% in Great Britain, for example. Inflation is rampant all over the world. So you have a backdrop of extremely high inflation and massively rising energy costs, and all of this is going to have a devastating effect on the world economy. In the US, we currently have what I would call a mild recession. I anticipate that recession is going to get worse as the Fed continues to raise interest rates and tighten credit. That, accompanied with these extremely high energy prices, is going to cause further weakening in the economy. Now, while we're going to have a very weak economy in the United States and probably a severe recession, I think the situation in Europe is decidedly worse. Now, the effect on the capital markets, I believe, will be tremendous. We've only seen the tip of the iceberg with the sell-off in the stock market. Recently, stock markets rallied. I think it's a rally in a bear market. But what we're going to see as this energy situation takes hold is its continuing and deepening effect on the economy. And what that's going to do is it's going to affect not only economic growth, but it's going to affect corporate profits. As you combine the effect of rising energy costs with already massive embedded inflation, you're going to see a decline in corporate earnings, as well as an overall decline in economic activity. Now, needless to say, this puts the Fed in a very difficult position, right? Because you have other forces that are slowing down the economy, other forces that are impacting economic activity. Meanwhile, they're stuck in a box where they have to raise interest rates. It's kind of the worst of all scenarios for the Fed. So as we look at this going forward, I see more volatility coming into the end of the year. We're going to see further sell-offs in the stock and bond market. We're going to see more volatility. So I would advise you to keep your powder dry. Do not be fooled by this recent rally. It is a rally in a bear market, in my view. And look to, in the fall, more volatility in the stock and bond markets. Keep an eye on this energy situation in Europe because it's very dire, and keep watching this channel because I will have more content on this and other issues. Thanks for watching, and I'll see you on the next video.